I'm Diane Rosagnola, here in LA for REITworld 2019, NAREIT's annual conference. I'm here with Neil Shah, President and COO of Hersha Hospitality Trust. Hi Neil, how are you?
Hello, I'm well.
How would you describe fundamentals within Hersha's core markets, and what steps are you considering in order to contain costs across the portfolio?
Yeah, no, thank you for the question. Our core markets at Hersha are the major global gateway markets of the U.S. So we're in New York, Boston, Washington, Los Angeles, Northern California, Miami. These are some of the most valuable markets in the world from a real estate standpoint. They're among the most visited markets of the world from a domestic as well as an international standpoint. But 2019 has been a very challenging year for those markets. It sometimes feels like it's so long ago, but it was the government shutdown was just the beginning part of this year. So started the year with the government shutdown, followed by trade issues and geopolitical uncertainty. And those factors have made the top line in most of these major global gateway markets to be tepid at best, very low growth on the top line. And unfortunately on the bottom line, we have had significant wage growth. We've had significant increases in property taxes and the like. And so it's made these major gateway markets, although still very valuable from a real estate standpoint, in the short term and from an operating standpoint, they have been weak and challenging. And that's led us to be much more focused on the cost containment front. As managers of our business, we're always very attuned to costs and the like, but when there is such marginal kind of top-line growth to create opportunity, we really have to go below the line. And unfortunately, it's a little bit different than prior slowdowns around the financial crisis or around after 9/11. There was such a demand shock and such a reduction in the number of people coming through hotels that you could cut by cutting the amount of staffing that you have to serve guests. But in today's environment, demand remains very high. It's just not paying the same prices as it used to. And so we have to, you can't really just cut bodies, as it were. You have to really do business differently. And so we're exploring and enacting a lot of changes in our operating model, from how you clean rooms, how often you clean rooms, what kind of opt-out opportunities you give guests, because if someone's staying for 4 or 5 nights, they may not require the same amount of service in their rooms. We've done a lot through our EarthView program, where we do a lot of environmental and sustainable initiatives. They also are initiatives that actually reduce costs in water consumption and energy consumption, and so we're continuing our efforts in that area.
And how will newly acquired hotels and assets that have been strategically repositioned over the last 2 years contribute to Hersha's performance in 2020?
We have 3 buckets of hotels, 3 categories of hotels that are hotels that are either that we acquired very recently and are enacting business plans that lead to above average growth, or hotels that we took offline to do some major renovations and repositionings to. And then we have a third bucket, which were 2 hotels that were absolutely closed for over a year as we rebuilt them and repositioned them. Those 3 buckets of hotels account for nearly a third of our portfolio, and they will be providing significant growth. Year to date, they were over 10% growth from those assets, and we expect them to stabilize in 2021, so we have one more significant year of growth to go in 2020, and they will be driven by these repositioned hotels.
And has Hersha's view toward home sharing sites and their potential impact on supply shifted at all?
Home sharing, I'd like to refer to it as short-term rentals, because that's really the business that they're in. It may have started early on as an opportunity of sharing your home, sharing an extra room, but what's actually happened in major markets around the world has been that there are operators that are either buying units or renting or subleasing units from other owners and then providing them on a short-term basis to other consumers in those marketplaces. That short-term rentals market continues to be a significant impact in major gateway markets today. It still remains primarily a leisure segment alternative. And among value-oriented leisure travelers in particular, the short-term rental market has had a significant impact in the markets. Our business is still primarily focused on business transient customers, and so the impact is a little bit less on that side, but short-term rentals have and will continue to have a significant impact in our business.
Neil, thank you so much for your time today.
Thank you, my pleasure.
For more from REIT World 2019, visit NAREIT's website, REIT.com.